So looking at realized vol, so Bitcoin realized vol did hit sub 30 last week before the break, but the break did make it pop to 35. Now Ethereum, that realized has been kind of grinding lower and has flatlined on this move. So it hasn't. So whilst we saw a little bounce here and realized on Bitcoin, we've just kind of flatlined, but we're flatlining at around 37, 38 realized on ETH. So ETH is very marginally still out realizing if we capture the last 10 days of movement. Implied vols did move higher. You can see that here and here. You know, people thinking that the break in spot would bring a vol move higher with it as well, because we've got a cool skew. Remember, when we're looking at implied vol here, we are looking at floating implied vol, which means we're comparing the at the money implied vol today with the at the money implied vol a day, 2-3 days ago. So if the at the money level itself changes and you go to a higher strike and you've got an upside skew in your asset, then just by spot going up, you're going to see vol going up, right? And that's kind of the mirror image of what we see in equities, where spot down and vol goes up doesn't actually mean the vol has moved. It just means you've moved to a different strike. So that's kind of what's gone on in Bitcoin here. We've moved up in spot and we've moved to a higher vol strike, which is why volatility actually went up. And actually overnight, in the last sort of since midnight last night, we've seen vols actually come down. So it's not even really up that much now that the market has settled. Okay, so our first main target of 42K was reached. We seem to have lost a little bit of momentum there. So that also explains why vol's kind of coming in. We're starting to see some profit taking as well in short dated calls. Vol carry is still very positive here. These red bars are positive by about 15 vol points, and that's in both assets. So, you know, it's basically telling you that the move has been relatively orderly. It's not been chopping around crazily with big swings. It's just kind of been breaking and breaking steadily higher. And so with this much juice, variance, risk premium, volatility, carry, they mean the same thing. With this much juice, you'd expect the gamma sellers to be coming back. And like I said, overnight, they've already started to come back today and taken that front end vol back down. Now, the selling of the weekly calls that we had been doing against some core longs that we had on, we stopped doing that last week because we were anticipating this break. Now that we had the break, now that we've settled at 42, I actually don't think it's that bad a time to start doing it again. I haven't pulled the trigger yet. I'm just kind of being a little bit tentative with it, but I think there's probably some juice in selling like the 45K strikes weeklies now systematically, because I don't really see us breaking 45 in the immediate term, but you never know, right? I think bond market is getting quite volatile. Excuse me. TLT's up 2% today. So if yields really want to go and they take the dollar with them, who knows, maybe crypto can get a bit more violent on the upside. So for now, I'm going to let the price action settle down, and that's going to dictate to me whether or not I want to get more aggressive selling those weekly calls, right? That's kind of the way I'm looking at it. Okay, that's realized vol. Term structure, we did see a little pop, but like I say, it is getting faded pretty fast as we speak. So BTC term structure, we saw a 5 vol pop in the front. Gamma buckets were really the ones that were bid. Back end was only bid by about a vol. January still containing that kink. As we said, the market's zeroing in on early Jan for the dates. Ethereum term structure, similar story, up by about 3 in the front. Back end actually more bid, 2 vols there. Kind of telling you the story that everyone's like, okay, Ethereum's going to have its day in the sun later in the year. So whilst Bitcoin might have its approval in Jan, then the Ethereum story is going to start, doing the rounds, and then maybe by March, June, September, whenever it may be, that's when Ethereum has its move. So that's kind of what the long end bid to Ethereum is kind of suggesting to me, right? And the fact that the call skew, in fact, we'll talk about the skew in a minute. Let me just bring it up. So that's the term structure. Looking at the vol spread grinding slightly higher, looking at about 1 to 2 vols across the curve. That's Ethereum over. So that's quite interesting. The fact that Ethereum has not realized as well as Bitcoin this week, and yet the implied vol is actually pushing higher relative to Bitcoin. That is telling you that implied vol is forward looking, not backward looking, right? If there was ever any evidence of that, that would be it, right? Realized vol is telling you one story, implies are telling you something else. They are looking forward to the next move, right? So that's kind of, I've been banging on about that for a while. So the ETH Bitcoin cross as long as it holds that major support level and doesn't make new lows there, I'd expect that it to bounce from there. And like I said, I think Q1 next year is kind of where we start to see that move happen. So starting to position for that now, I think, is a sensible strategy. Okay, looking at SKEW, both the assets, SKEW converging in the two assets. So we did see a bit of divergence last week. They're back to kind of equal now. So we've got very little SKEW in the front end, about a vol or two for calls still. But then in the back end, we're looking at 6 or 7. And that's for both Bitcoin and Ethereum. So that front end SKEW flattening is suggesting that a near-term pause in price action at this 42K area is what the market is thinking. And the fact that they're selling out their short-dated calls to take profit is a flow that is pushing that SKEW back down. Now, I would use that relative strength that we've seen in Bitcoin recently to get into these call switches that I've been going on about, long Ethereum, short Bitcoin calls. That is a trade that I like and I have done. We'll talk a bit about that later on, as I think that the re-rating is going to come in Ethereum next year. And then, like I said, that call SKEW in the long end is kind of confirming that the fact that Ethereum's got a steep call SKEW just as much as Bitcoin is confirming that the ETH ETF approval scenario is on option traders' radars at least. And then once that Bitcoin story passes, then maybe they're going to start to price more in and more. They're going to focus more in on that. And you might start to see even more of a bid coming for Ethereum, vol and upside relative to Bitcoin. I'd expect to see that type of price action in the vol early next year. All right, so that's what I'm seeing there. The strategy compass is obviously saying sell calls in Bitcoin, given how high we are and the fact that vol had a little pop. Ethereum saying bearish risk reversals. I mean, it's one of those things. If you haven't got any hedges on, now's a lovely time to be putting on hedges, right? For sure, especially now that we've reached 42K. But like I say, I've been riding the wave on crypto and actually not hedging this whole way up, which has worked beautifully, obviously. And I'm just going to let the price action dictate when I put hedges on, right? I'm just going to keep letting it run. And then if we break major supports, like if we were to break back below 38K in short order, then I'd stick some hedges on. But I don't feel the need to do that while the momentum is so strong. I'm going to kind of leave it alone. All right, now volume, in terms of flows, volumes in Bitcoin were flat at around 6 billion last week. Before the break higher, we were seeing major concentrations of call spreads in December. So we've got the paradigm flows up till the 1st of December. So that was before the break. We saw big buyers of the 40K strikes and sellers of the 45K strikes. Then this chart shows you the flows from the 2nd of December to the 6th. So I basically split the week in half to show what the flows have done. So we are generally buyers of call spreads, particularly in December, into that break. And then we've seen big sellers here of December calls taking profit in quite a chunk of premium, talking about like $7 million of premium or something like that in the 40K and the 42K calls in December. We saw some fresh buying of the 45 and the 50Ks in December. That's these green ones. And then we saw a roll of January 42K calls into June 60K calls. So rolling up and out and just kind of rolling up in terms of December. It wasn't actually rolling. It was like separate trades where there was profit takes there. And then when the vol reset a bit lower, there were some buys of these high strikes. But in general, that's the flow that we've been seeing in Bitcoin. In terms of what we've seen in Ethereum, we saw volumes down about 2.5 billion, so not quite as excited to be trading Bitcoin options this week, Ethereum options this week, because the break wasn't really that violent. Last week, the main flows were kind of call spread buyers in January. So we saw call spreads being bought in the 24.30 strikes and the 26.32 strikes. We also saw that big roll of March calls. So there's a big sell here into June. So the June bucket being those and those. So it's kind of a March-June call calendar being bought. Now, since the break higher, the ETH flows haven't really seen any profit taking because the ETH move hasn't been big enough to justify it. And people haven't bought as many outright calls. They've just kind of bought call spreads and things like that maybe. So we haven't really seen that offsetting flow like we've seen in Bitcoin. You've seen more buyers of January upside. So we've seen here on the 2,500, both DEC and Jan getting bought, and then all the strikes up to 3,500 getting bought there in the upside space. And then the shorter dated stuff, seeing some gamma sellers. We saw sellers of the 2,300s in DEC expiries, middle of DEC, end of DEC. And we saw some straddles here on the 2,200, generally systematic sellers there. and put spreads getting bought for protection on the 1900, 1600 area. That's very short dated protection buying there as well. Okay, so that's the flows. Gamma positioning wise, Bitcoin dealer gamma did flip negative. So it was a bit more neutral this time last week around here. It did spike down and then it's kind of recovered a bit, but it's still short. The big short strikes are 40K, 42K. Above 45, it starts to get long again because of all those call spreads that we talked about. So right here, right now, the street is short, so we could probably see quite a bit of choppiness. Ethereum, not so much though. As you see, it flipped into positive a week ago. It did dip down, and now it's back to positive. Quite a balanced position. Loads of longs up here versus a load of shorts up here, down here. So pretty neutral positioning in ETH. Might make it, well, it won't necessarily make it sticky, but it just won't exacerbate the movement in ETH, basically, right? So ETH probably needs a bit more story to move it, whereas Bitcoin can kind of move in its own right because the short gamma is there. All right. That sale of local gamma that we talked about in terms of Ethereum probably gave the dealers back some inventory, and there hasn't been enough of an influx of outright call buying to kind of offset that and leave the dealers short gamma, basically. That's why the gamma position in ETH is kind of cleansed and become a bit more neutral. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.